Over 80% of global trade moves by sea, making the world's oceans the lifeblood of international commerce. Every day, thousands of massive cargo ships crisscross the globe, carrying everything from electronics and cars to food and raw materials. These floating giants connect continents, fuel economies, and keep store shelves stocked in every corner of the world. This immense flow of goods makes maritime choke points like the Panama Canal, the Suez Canal, and the Strait of Malacca absolutely vital to the world economy. These narrow passages are the gateways through which global trade must pass, and any disruption can have far-reaching consequences. For over a century, the Panama Canal has served as a strategic shortcut, dramatically reducing travel time between the Atlantic and Pacific Oceans. Its construction reshaped global trade routes and cemented U.S. influence in the region, turning Panama into a crossroads of commerce and power. But these arteries are vulnerable. Disruptions at these choke points, like the infamous Ever Given incident in the Suez Canal, send shockwaves through global supply chains, causing delays, shortages, and billions in losses. The world watched as a single ship brought a vital trade route to a standstill. Today, the Panama Canal faces its own crisis. Severe droughts have reduced water levels, forcing authorities to impose transit restrictions and causing costly delays for shipping companies. The canal's reliability, once taken for granted, is now in question. This growing vulnerability opens the door for alternatives. Shippers and nations are searching for new routes to keep goods moving and avoid costly bottlenecks. The prospect of a new canal in Central America is gaining attention. Such a project could shift trillions in trade, alter established shipping patterns, and fundamentally change the balance of maritime power in the region. Enter China. As the world's largest exporter and a rising global superpower, China is determined to secure reliable trade routes that bypass U.S.-influenced waters. Its ambitions extend far beyond commerce. They're about strategic security and global influence. A Chinese-backed canal in Central America would be more than just an engineering marvel. It would be a bold move in the global power game. The stakes are enormous: economic rewards, geopolitical leverage, and the ability to shape the future of world trade. The potential to redraw the map of world trade is real. New routes could shift the flow of goods, money, and influence for generations to come. The question is no longer just about engineering or logistics. It's about ambition, money, and power. The future of global commerce may depend on who controls these vital arteries and who dares to build new ones. The Nicaragua Canal, a $50 billion project backed by Chinese firms, aims to outsize the Panama Canal and reshape global shipping. The route would cut across Nicaragua, using Lake Nicaragua as a key transit point. For China, it's a Belt and Road milestone, securing trade routes and bypassing U.S. influence. The canal would handle the world's largest ships, promising new economies of scale. Proponents tout jobs and economic transformation for Nicaragua, one of the region's poorest nations. Yet skepticism abounds. Questions about financing, environmental impact, and transparency persist. The vision is grand, but the path from blueprint to reality is riddled with obstacles. The last major push for a Nicaraguan canal began in 2013 when the world watched as the ambitious HKND Group unveiled its grand vision. The project promised to rival the Panama Canal, capturing global headlines and igniting hope for a new era of prosperity in Nicaragua. At the center of it all was the enigmatic chairman Wang Jing, a Chinese billionaire whose mysterious background and bold promises fueled both excitement and skepticism. Despite securing a sweeping 50-year concession and hosting a high-profile groundbreaking ceremony attended by dignitaries and media, the project quickly began to unravel as challenges mounted. Environmentalists sounded the alarm, warning that the canal would devastate Lake Nicaragua's fragile ecosystem, threatening wildlife and the livelihoods of thousands who depend on the lake. Meanwhile, protests erupted across the country as local communities fought against land seizures and displacement, demanding their voices be heard. The project's financial foundation crumbled when Wang Jing's fortune was decimated in the 2015 Chinese stock market crash, leaving the canal's future in doubt. Hopes for massive Chinese state investment faded as promised funds never materialized and official support quietly evaporated. By 2018, HKND had vanished entirely, leaving behind empty offices and broken dreams. The Nicaraguan Canal project became a cautionary tale, a stark reminder of the dangers of overreach, secrecy, and ignoring local realities. Yet the strategic logic behind a second canal endures. With the Panama Canal facing growing congestion and climate-related constraints, the world's appetite for alternatives remains strong. Now, as Nicaragua draws closer to Beijing, talk of reviving the canal project has resurfaced, with new promises and renewed diplomatic energy. This time, proponents hope for more direct Chinese state backing, aiming to avoid the pitfalls of the past and deliver on the canal's transformative potential. The lesson is clear: ambition alone isn't enough. True success demands transparency, reliable funding, and genuine local support, or history may simply repeat itself. The Panama Canal, a marvel of early 20th century engineering, stretches 82 kilometers across the narrowest part of Central America. This vital waterway connects the Atlantic and Pacific Oceans, serving as a crucial shortcut for global maritime trade. In contrast, the proposed Nicaragua Canal would be a staggering 278 kilometers long, over 3 times the length of the Panama Canal. This ambitious route would cut across Nicaragua, traversing a much wider expanse of land and water. Building the Nicaraguan Canal would require unprecedented earth-moving efforts, involving the excavation of vast amounts of soil and rock, and the construction of entirely new waterways through challenging terrain. A complex lock system would be essential to cross Lake Nicaragua, the largest freshwater lake in Central America. The canal's main advantage, however, lies in its sheer size and capacity. Unlike the Panama Canal, the Nicaragua Canal could accommodate super post-Panamax ships, massive vessels that are simply too large for the current Panama locks. These larger ships can carry significantly more cargo, making the Nicaraguan route potentially more attractive for global shipping companies seeking efficiency and scale. For China and other major exporters, this could mean more direct, high-volume shipping routes to the U.S. East Coast and Europe, bypassing current bottlenecks and reducing congestion. Even a single day's reduction in transit time can translate into millions of dollars in savings for shippers, making route efficiency a top priority in the competitive world of global logistics. However, the logistical hurdles are immense. Untested and rugged terrain, complex water management challenges, and significant environmental risks to local ecosystems and communities. The Panama Canal, by contrast, boasts over a century of proven experience, reliability, and established infrastructure, making it a trusted artery for international trade. The Nicaraguan project, on the other hand, would be starting entirely from scratch, with no existing infrastructure or operational history to rely on. This means there's no guarantee of smooth operations, and the risk of costly delays or unforeseen complications is high. The scale and complexity of building a new canal through Nicaragua are truly unprecedented, representing one of the most ambitious infrastructure projects ever proposed in the region. Proponents argue a second canal would ease congestion, lower shipping costs, and force the Panama Canal to stay competitive. For Nicaragua, the promise is jobs, investment, and a leap from poverty to global trade hub. But the risks are huge. A $50 billion price tag, uncertain returns, and the threat of debt-trap diplomacy. If trade projections fall short, the canal could become a costly white elephant. Corruption and unequal distribution of benefits are real dangers. Displacement and environmental damage could harm the very people the project claims to help. The economic gamble is massive. Success could transform Nicaragua, but failure could be catastrophic. The stakes are nothing less than the country's future. In Washington, a Chinese-backed canal in Central America is seen as a direct challenge to U.S. influence. The U.S. has long considered the region its backyard, with the Panama Canal a symbol of its power. A rival canal could give China economic and military access just miles from U.S. shores. Officially, the U.S. raises concerns about transparency and the environment, but the real worry is strategic encroachment. Expect diplomatic pressure, scrutiny of the project's terms, and efforts to keep the Panama Canal competitive. The U.S. may offer alternative investments to counter China's influence. The canal is now a proxy in the broader U.S.-China rivalry. It's more than infrastructure. It's a new front in global power politics. Panama views the Nicaraguan Canal as a serious threat to its economy and global standing. Publicly, officials downplay the risk, but privately, they know competition could erode their advantage. The project is a wake-up call for Panama to innovate and stay competitive. Costa Rica, meanwhile, fears environmental fallout, especially along the San Juan River. Regional reactions are mixed. Some see opportunity, others risk. The canal could bring investment and attention, but also instability and ecological harm. Every country in the region must weigh its interests in this shifting landscape. The project forces tough choices in a new era of great power competition. The engineering challenge is staggering. 278 kilometers of excavation, billions of cubic meters of earth, and a complex lock system. Lake Nicaragua, the project's centerpiece, is a fragile ecosystem and vital water source. Dredging risks contaminating the lake and introducing salt water and invasive species. The canal's water needs are immense, raising fears of shortages and environmental collapse. Climate change and drought could cripple operations before they begin. The $50 billion cost is likely optimistic. Overruns could push it far higher. Financing, logistics, and environmental safeguards would need to be unprecedented. The project must conquer nature, economics, and politics all at once. Without solutions to these challenges, the canal may remain a dream. The future of global trade could hinge on overcoming these monumental obstacles. A Chinese-backed Nicaragua canal could transform global trade and geopolitics, challenging the Panama Canal's monopoly. For Nicaragua, it's a shot at economic transformation. For China, a strategic leap. But the risks, financial, environmental, and political, are immense. The failed HKND attempt is a warning. Grand visions can collapse under their own weight. The canal is now a flashpoint in US-China rivalry, with global consequences. It's more than a waterway. It's a test of ambition, sustainability, and power. Whether it becomes reality or remains a phantom, the logic behind it will persist. The world must ask, will a new canal unite global trade or deepen the divides of a changing world?